Welcome to the Snowbirds Expat Radio Podcast. I'm your host, Gerry Scott. Today's episode, we're going to be discussing Canadians doing business in the U.S. And our guest today is Sid RAO, tax lawyer and partner with M&P, the International Tax Services Group, and Sid is based in Surrey, BC. So before we jump into the questions and all the content and all this interesting information, and I'm looking forward to this podcast, Sid, tell us more about yourself, your career, and a little bit about M&P as well.
Sure. Well, it's good to be with you, Gerry, today. And it's a very fitting topic as we're quite busy right now with helping a lot of Canadian businesses expand to the U.S. But my background is that I'm originally from the U.S. Went to law school there and got my JD degree, and then I specialized in tax and got a LLM, or Masters of Law in Tax. And then I moved to Canada about 14 years ago, moved to Calgary, and I've been working in cross-border tax since then. I've spent part of my career helping high net worth individuals, U.S. citizens resident in Canada, or Canadians with U.S. business activities or U.S. investments. And then probably over the last 7 or so years since I've joined M&P as a partner, my focus and my practice has been mostly corporate tax, so helping Canadian businesses that have already expanded or are thinking of expanding to the U.S. and navigating some of those U.S. tax issues. So I've kind of seen in my career both the individual side and as well as the corporate side, and certainly have clients in both areas.
That's very interesting. So what brought you to Canada?
So that's a great question. I moved to Canada, like I said, about 14 years ago, and I worked at a firm out of Calgary that had just started a cross-border practice, and they actually hired an alum from my law school to kind of lead that practice. So he recruited me and another individual from my class, and we both moved up from Chicago to Calgary, and began our careers actually in Canada.
Oh, that's interesting. Now, there was one other thing that I was thinking about. I've met a lot of wonderful people from Chicago. Sadly, there isn't much hockey to be cheering about these days, but they do have BC's very own Connor Bedard. But I'm always razzing. I've always got a $5 bet with a good buddy of mine from Chicago when the Canucks play the Blackhawks. So I think I'm up about $20 now on our $5 bets. I think we've done well. Okay, so let's jump into it. So what constitutes doing business in the U.S.?
Yeah, and that's a very common question we get from Canadian businesses. And I would say that generally speaking, the way I would define doing business in the U.S. is any level of activity that triggers some kind of compliance requirements in the U.S. So if you could think about, your typical Canadian company that's been practicing or been having their business in Canada, and they might get to a certain point where they want to expand their market and they look down south. The U.S. obviously is a huge market and a lot of business opportunities for Canadian companies that reach a certain size. Now, they could go and, let's say, hire employees in the U.S. They could open up an office in the U.S. Those are all things that are clearly doing some kind of business activity in the U.S., but it need not be that clear. A lot of Canadian companies that are simply selling goods to the U.S., after a certain point in time, they might have compliance obligations. So, for example, a Canadian company is selling widgets to customers in the U.S., no other presence in the U.S., but they may trigger corporate income tax filings just by sales thresholds in various states. They may have sales tax obligations. They may need to be collecting and charging sales tax. So any of those kinds of activities, if they're robust enough, can create some kind of compliance burden. So I think that the definition of doing business is quite broad. It encompasses not only things that we would normally think of doing business, like opening up a shop or hiring employees in the U.S., but also just selling into the U.S. Can create some of those compliance burdens.
It's interesting how the internet has had such a large impact on the world economy and Canadians having the opportunity to do business in the United States and never mind creating this huge cross-border opportunity for people and firms like M&P, et cetera. So here's my next question, and I'm going to tell everybody these questions were loaded by Sid. So these are his questions, and I've gone through it a few times, and I'm always looking forward to the answer. I'm a Canadian business, and I sell tangible properties to customers in Canada and the U.S. I have no other presence in the U.S., no inventory, employees, or agents. Could I still be doing business in the U.S.?
Yeah, like we talked about, it doesn't require you to do actually anything in the U.S. in order to have some kind of compliance burden there. So, for example, let's say you become very successful, you're selling your products into California to customers in California. You ship them from Canada using a common carrier, so you're not using your own trucking, fleet or your own agents in the U.S. or anything like that. You're just simply shipping your product down to customers in California. If your sales go above a certain threshold, California is going to assert that they have the jurisdiction to tax you, corporate income tax. And so at that point in time, your Canadian company would be required to file a return in California and report some portion of its business income there. In addition, there's sales tax issues as well. So if you're making retail sales and your sales, again, are above a certain threshold, you might have a requirement to actually register for a sales permit in that state, and then collect sales tax and remit that on behalf of your customers. And I can tell you, Gerry, one of the biggest issues that I see with Canadian companies is that sales tax in particular is something that a lot of companies kind of are not aware of those obligations. And they may say, hey, this isn't really our responsibility. The customer's its responsibility, it's their tax. So we're just going to not pay attention to that. And where this comes up a lot of times is two ways. One is your customer in whatever state gets audited by the state tax authorities. And then they'll see that they purchased something from this Canadian company, and they'll say, well, hey, let's see the invoice there. Why didn't that company charge you sales tax? So now they know where you are, your address, the invoice, and then they reach out to the company and start that initiation process of figuring out what was happening there. The other way it comes up is, there's a lot of mergers and acquisition activity happening even now, especially from U.S. buyers because of the strong dollar compared to the Canadian dollar. So we will often see situations where a U.S. buyer wants to buy a Canadian corporation, and they're doing their due diligence, and they see that the company has not been compliant with either income tax or sales tax in the U.S., and that creates a big unforeseen liability and can really derail a potential sale. So it really is important to look after those things and to pay attention to those kinds of issues, because eventually one day they may rear their ugly head. So,
before I go on to the next question, is a bit of a kind of a follow-up to question number 2. I can never stress enough the purpose of this podcast was not to educate people so they can to do everything themselves. And the purpose was to introduce them to the great people, like the partners we work with, like Sid and other folks that have been on this podcast, but making sure that you get the correct answers from the right people. So no, it's not intended for the do it themselves, because I couldn't even imagine, as much as I love to learn and what you have to say, I just know that we're in good hands when we reach out and we get if we refer someone to Sid to take care of them. So that, just to remind people, this is not a do it yourself podcast. This is about introducing to the right people that are smart. And in Sid's case, being a lawyer and growing up in the United States and now servicing clients in Canada with the M&P cross-border tax team. Okay, so the next question: what filing obligations And when would they apply?
Yeah, so in that case where you have let's say a Canadian company that, like I said, has no office or place of business in the U.S., doesn't have any employees, and just simply selling into the U.S. The U.S. has a jurisdiction, or they're going to assert jurisdiction to tax non-U.S. companies if they deem that company to be engaged in a U.S. trade or business. And that's kind of a term of art. It's not clearly defined in the Internal Revenue Code, so the statutes or the regulations. It's really kind of developed over case law. And so it's sometimes a very ambiguous threshold to reach. And so oftentimes where there's any doubt as to whether a Canadian company is engaged in a U.S. trade or business, we assume that there is, and then we look after the compliance that comes from that. So, as I mentioned, if a non-U.S. company or Canadian company is deemed to be engaged in a trade or business in the U.S., they're subject to U.S. federal income tax on those profits attributable to that fixed place of business for that trade or business in the U.S. Canada and the U.S. have a tax treaty, and that treaty further protects Canadian companies by basically increasing the threshold of activity that has to occur before a Canadian company is actually subject to U.S. federal income tax. So in addition to having potentially a trade or business, a Canadian company has to have what we call a permanent establishment in the U.S. in order for that company to be subject to U.S. federal income tax. And a permanent establishment is a defined term. It's found in the Canada-U.S. tax treaty. And generally speaking, it incorporates things like an office or a fixed place of business in the U.S. If you have employees in the U.S. that can conclude contracts on behalf of the Canadian company, that can create a permanent establishment in the U.S. In addition, if you're a service provider, if your business is to provide services, whether that's, let's say, architectural services, engineering services, to the extent you do those services in the U.S., and individuals perform those services over a 182-day period in any 12-month span, that could also trigger what we call a permanent establishment. Now, what's important to note is that a Canadian company who clearly doesn't have a fixed place of business or any of those other things that I spoke about, they are required to file what's called a treaty protective return with the IRS and assert that protection under the treaty. Okay, so the kind of the analysis is, if you're a Canadian company, the first question is, are you engaged in a trade or business? That's sometimes a much more difficult question to answer than whether or not you have a permanent establishment. But the triggering event is that trade or business, because then it requires a company to file a tax return in the U.S. and assert protection under the treaty. So, a lot of our clients, we make that determination, or we think, hey, there's some risk that you might be engaged in a trade or business. We suggest or recommend you file this treaty protective return. And actually, it's more of an insurance policy. So if the IRS determines that, hey, we think, based on your activity, you're subject to U.S. tax, and you don't file that return, the IRS could basically tax you on your gross receipts rather than allowing any deductions. So you get denied the deductions, and you're just taxed on your receipts sourced to the U.S. That's a pretty bad result. The other risk is that the IRS could say, well, hey, you didn't file this treaty protective return and assert protection under the treaty. We can penalize you $10,000 for each year that you failed to do that. Okay, so filing that return is really more of an insurance policy. It prevents the IRS from being able to do those things. And so we oftentimes will recommend that even with a little bit or nominal activity in the U.S.
When I look at the next question here, I'm gonna actually put it in a different content here. We see a lot of doctors and dentists, U.S. people move to Canada, even accountants that become part of partners with these organizations that are able to incorporate. What can a U.S. person who is a professional, that in most cases, if you were Canadian, you'd be able to incorporate to be able to put a lot of money in. What can a U.S. person do when they move to Canada? from a incorporation point of view? It's kind of the same question you have on here now.
Yeah.
What can they do?
So it is important to note that U.S. citizens and green card holders, and when I say green card holders, that includes people who have a green card that are holding on to an expired green card. If you have not formally abandoned that green card, you're treated like the same way as a U.S. green card holder that has a valid card. They're all treated as U.S. persons for U.S. tax purposes. So what that means is a U.S. citizen or a green card holder resident in Canada is subject to U.S. tax on their worldwide income. They may also be subject to tax in Canada as a Canadian resident. And then that's important that you understand how to source that income, and there's a mechanism under the treaty to claim foreign tax credits. So generally speaking, you won't be double taxed. You'll just pay the higher of the two rates. I mean, that's the general notion. But because Canada and U.S. tax laws are different, and those differences are what provides risk to individuals who are U.S. persons. But because of those differences, you could trigger tax in one jurisdiction and not the other. And that could lead to situations where you're double taxed. Okay. So when you're talking about like a professional who's moved up to Canada and is a U.S. person, most professionals in Canada incorporate. They run their practice or their business through a holding corporation or through a practice active corporation. The U.S. has, I would say, different tax regimes that look to seek to tax profits earned in a foreign corporation that's owned, at least from a U.S. perspective, foreign, tax those profits in a year that they're not distributed. So, for example, you have let's say a dentist who owns a practice 100% through a corporation, and that practice, he or she is investing their after-tax profits maybe in marketable securities, so they put their securities in that company. The U.S. will look at that and say, hey, maybe you're doing something nefarious there by putting those investments into a corporation and not into your personal hands. So we're going to tax that income held corporately, attributed to you personally, even in a year that you haven't taken any distributions from the company. Okay. So, that's where the two, the Canadian tax law and the U.S. tax law differ. And that's what can really trigger a lot of tax for U.S. individuals or U.S. professionals that are incorporated. Unfortunately, there are ways to kind of plan around that. And there are different ways that we can make certain elections. We can structure the corporation and how you hold that corporation in different ways to kind of mitigate against that. But I think it's important to note that, what works in one jurisdiction doesn't always work in the other. And that's where, you really need to seek advice as to what are the implications of doing something like that, incorporating an entity in Canada if you're a U.S. person.
We talk about doing webinars. We've got some features coming up on the app where it allows notifications. And I think it's going to be very important for us to do a presentation, having you as the big kahuna, one of the terms we use in Maui quite often, man of honor, man of greatness, king. So what we'll do is we'll do a great presentation for professionals, these dentists, accountants, lawyers, all these Americans that are living in Canada, and they've been told that they're restricted to incorporating. But you're saying that there are things that you can do to assist those people. Yeah,
absolutely. And there are a lot of reasons why you would want to incorporate. And what we want to do is try to value those benefits, but to make sure that you're not going to be adversely taxed in the U.S. And like I said, there are ways in order to plan around that. But it does, you're better off seeking some advice on how to do that rather than trying to do that yourself.
And once again, a reminder, this is not a do-it-yourself podcast. This is connecting you to the right people to make sure you get the right advice so that you're 100% compliance. So here we are. I worded the last question in more of the things that we're dealing with on an ongoing basis. These dentists and doctors and accountants are calling us asking, what we can do. Yes, accountants calling us as well, asking
Yeah.
what we can do. So the last question we have is, what is your number one advice to U.S. persons, residents in Canada, given all those complexities?
Yeah, Gerry, I think it goes back to what we've already kind of the theme of probably our discussion today, which is, it's just, if you're a U.S. person living in Canada, your tax situation is just that much more complex. You're dealing with two different tax jurisdictions, each wanting a slice of the pie. Their laws are not always compatible. And so knowing those differences is really critical to making sure you're not paying double tax or you're not paying more tax than you should. And so, unfortunately, that advice, that U.S. tax advice in Canada, it's at a premium because, people that are practicing in this space need to understand both tax laws in one way or the other, because what you do in if you do some kind of planning in one jurisdiction, you have to understand what implications there are in the other jurisdiction. So I think the most important thing to understand is that there are complexities if you're a U.S. person, you're resident in Canada, that are just by virtue of having that U.S. citizenship or having that green card. And there are, fortunately, there are ways to plan around those things. These are not things that are that should deter you from really doing what you'd like to do from a financial planning perspective or anything else. But you just need to make sure that you're aware of that and that you can't go off and do something that works in Canada without recognizing that there's another jurisdiction that you're working with, and you make sure that they're compatible, whatever you're trying to do.
What's interesting is we're seeing people move from United States up to Canada, and now they only have to deal with federal tax now that they live up here, and federal tax on the U.S. side and provincial and federal tax on the Canadian side. But then we have these families then moving back to United States, and then we have to start dealing with what states don't recognize the treaty between Canada and the United States, and Hawaii is one of the bad ones, and California. It's very, very complex. So once again, having the opportunity to spend some time with Sid, and he's just down the road from Coquitlam, so we're very fortunate. It's just about a 9-iron away.
Right.
Not my 9-iron these days, but I'm sure Sid's for sure. So Sid, I truly appreciate being an opportunity to have this, get some time from yourself this time of the year. I know you've got a lot of deadlines. So I want to thank you very much for your expertise. And like I say, I really see an incredible opportunity on the webinar side. And this feature on the app will let people know that the upcoming webinar, Sid will be the guest star on this webinar. And it gives us a chance to really go into some really deep opportunities about what Sid is doing. And I'm sure there'll be some case studies on there as well. So Sid, thank you very much for your time today, and enjoy the rest of your day.
Thanks, Gerry. It was great to be with you. Very timely discussion as we're kind of going through busy season. And looking forward to the webinar and maybe diving a little bit deeper into some of those issues that we discussed today.
And I have to end every podcast by telling people the world is small, be kind to all. So thanks again. Take care.